He's talking about strategy overtaking BlackRock and Bitcoin holdings today, but that's not the most interesting part of this story. Yes, MicroStrategy bought another 30,000 plus coins, but there is something far more interesting happening today in April 2026. We have a new article detailing how MSTR, MicroStrategy, may have single-handedly ended the paper Bitcoin games that emerged in 2024 when BlackRock and Wall Street entered the space. Here we go, guys. It's obviously huge news. Strategy now literally the biggest Bitcoin holder in the world. And he, Nico hitting the horn. And, you know, passing BlackRock, which is a huge feat. A lot of us didn't think it was going to be possible, and Sailor's just accelerated the buys. But I'm not alone. I do have Nico and Kent with me today, so we got a packed house. So I'm gonna try to rip through the source material as quickly as possible, break down what I think is very interesting. So here we go. The Twitter post, initial post happening this morning. Strategy acquired another 34,164 Bitcoin for roughly $2.54 billion at a, rough estimate of 74,000 per coin. They've achieved a Bitcoin yield of 9.5% year to date. And as of yesterday, they now hold 815,061 Bitcoin acquired for roughly $61 billion at an average price of 75K. It's absolutely insane. We've been covering just the Stretch product alone in the last couple of days on the show. It's really just incredible how much capital is being acquired through that product alone. Obviously, the common stock is not finished acquiring more Bitcoin. Sailor, I think, is at this point kind of having that FOMO feeling. He's like, yo, I need to get as much Bitcoin as possible right now, because he said it a while ago. We're not going to be in a, quote, crypto winter as we've seen in the past. And it is starting to feel that way. Now, here is where it does get a little interesting, though. I'm going to start with this because this isn't the article I want to break down yet. I'm just going to read the headline. This is from the block. Sailor tweeted over the weekend on Sunday, like he always does, to think even bigger. So I want you guys to keep that in mind. Sailor is saying, leaving us some hints on Twitter of maybe what he's thinking. And the tweet was simple: think even bigger. Of course, they're also headlining the fact that he bought another 34,000 Bitcoin. It's now the largest Bitcoin holder in the world currently, and really accelerating that path to 1 million Bitcoin. It's going to be insane. It's like, I think 95% chances is going to happen like very soon. Obviously, I think by the end of the year, I don't know if they have a poly market bet on that, I would probably take that bet right now. He's going to get 1 million by the end of this year, I think, without a doubt, unless the Bitcoin price starts ripping. And that is the other conversation. But here we go. This is where I think it gets very interesting. And shouts out to DO News, because I didn't see a lot of people. I actually saw a few tweets about this basic mechanism playing out, but this article does a really good job of breaking it down so someone with a 42 IQ like myself can really understand what's going on. And keep in mind, we've all been asking one question. If you're on the show, we constantly reiterate the same question. If we are seeing the amount of buying pressure that we're seeing, billions of dollars, tens of thousands, if not 100,000 coins going out of the market, being bought up by these corporations, why isn't the price going up? The main kind of explanation, more on the checkmatey sign, is we've also seen a lot of selling from OGs and whales. And obviously, just a very simple supply-demand dynamic. If there's more selling than buyers, that's why the price is going down. But there is a more interesting angle playing out on the TradFi lane. And we have covered some of this in the back, particularly when we were talking about Jane Street, price manipulation, paper Bitcoin games. We have memes and rhetoric to explain this mechanism. But this article explained, I think, exactly what's going on in a very simple way. So this article is titled, "Basis Trades Are Done, Dragging Down Bitcoin Price, Says Investment Advisor. The Bitcoin CME Open Interest Near a 14-Month Low as Basis Trade Unwinds." And we will explain what that is. That's why I'm reading you this one. Two Prime Alex Bloom says one dominant buyer has changed the market structure. which is something I've said literally on Friday that Saylor may have single-handedly changed the trajectory of this bear market. And if one person can do this, which I've been saying for a long time, look, all it takes for the price of Bitcoin to really fundamentally change is someone with a very high conviction level wanting to buy a lot of Bitcoin. Obviously, we've seen Saylor do this, but that's usually the wild card that I always say. It's like, look, okay, we have the Bitcoin on exchange metric, but something about it never really sat well with me. It wasn't an airtight explanation for the Bitcoin price going up, because I always said all it takes is someone with a very high conviction to want to buy Bitcoin, and all of this goes out the window, or the opposite. All it takes someone that's spooked, selling a lot of Bitcoin, literally going from cold storage to the exchange, and all these numbers really mean nothing. And now we're starting to see the explanation for this. So here we go where it's going to explain it. The so-called basis traders are done dragging down the Bitcoin market just as one dominant buyer is accelerating its purchases. The sharp drop in futures positioning shows that what's known as the basis trade, which weighed on the market for months, is largely finished. Meanwhile, strategies literally buying like there's no tomorrow. Quote, when directional capital makes a decision, it moves the price. The combination of one large directional buyer systematically accumulating while hedge yield farmers exit is an unusual market structure. Bloom's assessment lands amid a striking divergence between the cryptocurrency industry at large and other global markets. Now, here is where the explanation of the basis trade plays out. And it goes, what exactly has changed? For much of the past year, sophisticated institutions ran what is known as the basis trade. The trade involves investors buying spot Bitcoin or the ETF or ETF shares and short futures contracts to earn the difference in pricing, which we've been talking to you guys for a long time, that the institutions, they're not just taking a one-way bet on Bitcoin. They make money either way. So they are, as we usually say in layman terms, like hedging their bet. Yes, they'll buy spot or the ETF, but they're also making yield, quote, by shorting futures contracts or having futures shorts. In simple terms, like I said, it's a yield play, not a bet that Bitcoin's price will skyrocket anytime soon, but the trade unwinding is one of the key drags on the cryptocurrency market. What we've been watching is a basis unwind masquerading as a bear market. Open interest in CME futures, Bitcoin futures, is falling under $10 billion, levels last seen in 2024. A basis unwind means those hedge positions are being closed, investors are exiting the future short and reducing the paired spot exposure. That mechanical selling can weigh on price even if sentiment is not collapsing. And we've been watching this on the show. We're all sitting here like, yeah, we're all kind of demoralized. It's like, okay, the bear market, how low are we going to go? But the news that we've been covering on the show has probably been the most bullish bear market period. And there has been a mismatch here where we're like, man, we're getting the best news possible around Bitcoin. And yet the price isn't doing anything. What exactly is going on? I think this is literally pinpointing exactly what's going on. And it does have to do with Saylor buying a bunch, which we've been covering, and the, quote, paper Bitcoin games being played by TradFi. Anyways, going further a little more, it goes, Bloom argues that phase is largely complete. Futures open interest is down sharply. Perpetual funding rates, payments between traders and leveraged crypto contracts have hovered slightly negative. That suggests many traders are leaning short and paying to hold bearish bets. At the same time, though, strategy is buying like there's no tomorrow. Bloom is calling this a structural bid at scale. In other words, one large buyer is accumulating tokens consistently while hedge funds step back. It has real implications for how the next leg of price discovery develops. I don't know, guys. It's a Monday morning. We can't get too bullish here, but we are seeing some interesting stuff on the back end as, maybe I'm taking a stretch here, as Wall Street starts to figure out what it means to hold the scarcest asset in the market. Yes, for a short period, you can do this trade stuff and, you can be a trader, but we might be seeing the fork in the road where the institutions start to catch on what Saylor is actually doing and realizing, wait, actually, maybe the yield play we're doing to just, get a little money on top of it, maybe that's not the smartest move if this is exactly what we think it is, which is the most scarce money in the world. So when true scarcity meets the trading game, true scarcity is going to win. Now, to add on this, and I might need Kat to explain this because I know what the words are saying, but I literally couldn't wrap my head. And I DM'd Luke this morning. I'm like, what does this even mean? He's like, I truly don't even understand. But anyways, Fong Lee tweeted this morning. And he goes, in 1 week, strategy increased Bitcoin gain by 82% to $4.97 billion for this year. This reflects the reflexive power of combining appreciating Bitcoin or digital capital with accretive financing, digital credit. I don't know. This is above my pay grade. This is using Wall Street terms. I'm like, hey, it makes sense. Sort of. I know what the words mean, but I can't really explain what this sentence is. All right. On that note, let's just look at the numbers here, and then I'll pass it on. So we can see BitcoinTreasuries.net. This is the updated numbers. Strategy, again, currently holds 815,061 Bitcoin. The clear lead in the Bitcoin Treasury game. But as I was saying on Friday, the real interesting play is going to be once strategy surpasses BlackRock. BlackRock came in. They're obviously one of the biggest hedge funds in the world, asset managers in the world, and they came out strong and acquired a lot of Bitcoin. And I know when we were talking about this, initially we're like, oh man, Wall Street's coming in, controlling the price of Bitcoin. They're trying to corner the market. Like, are we really that happy that institutions came in? Number isn't going up. They're playing paper Bitcoin games. It's like, maybe be careful what you wish for. Well, now it looks like a true Bitcoiner now holds more Bitcoin than BlackRock because we all obviously don't really trust BlackRock. But here's BlackRock's Bitcoin Trust, and they currently hold 802,823 Bitcoin. So I think what in fiat terms, Saylor holds about 15 billion more. Let me double check this. Saylor has about, I think it's 75 billion in Bitcoin holdings. Maybe it's 5 billion. All right. Where is this? 60 billion, 72 billion. Okay. Anyways, Saylor leading BlackRock now. Do we feel a little better now that a Bitcoiner, and hey, maybe you guys don't think Saylor's a real Bitcoiner, but he's a Bitcoiner. Now we have a real Bitcoiner in Wall Street doing better than the biggest asset manager, which I think they've been playing a lot of paper Bitcoin games since they entered the market. Now it seems like maybe we are starting to see what Saylor said last week. There's a delay between when we buy Bitcoin and when the price goes up. We might be coming to that end point, and it might mean the bear market isn't going to last as long as we thought it was going to be, which this is probably where I start dunking on my boy over here. You know, Nico keeps saying October is when the bear market officially ends. It might happen a little sooner. All I'm saying is I'm starting to feel a little bullish here. I don't know, man. The signs are looking well. The TA astrology is looking pretty good too, Nico. So
yeah, I mean, look, like first of all, Saylor has had his sights on this since BlackRock entered the game, and I remember vividly. It was like this like competition, and I was telling Opti, and it was a couple years ago, and Opti, I'm sure you remember, I was like, BlackRock's going for that top slot. BlackRock's going for that top slot. And it's crazy a couple years later. I know it's different because BlackRock, again, they're holding Bitcoin on behalf of their clients versus Strategy has a different strategy, no pun intended. But I think Saylor, in his mind, he wants to be the undisputed
top
champion of Bitcoin holdings, and today he achieved that. So what this means for the upcoming bull market, once the price action starts to pick up again, and I know we're on an uptrend right now, this means that I think Strategy for the next bull run is going to rip like crazy, because if you look at Strategy's stock price when it had the all-time high, I think it was like for the $400, $500 region.
I'll double check. I forget the date.
But the $400 or $500 region, it had significantly less Bitcoin.
Yeah.
And it also didn't have this stretch product that has been
November 24.
That has been basically success is putting it lightly. I'll put it like that. Like the stretch product is truly, and I'm saying this over and over again, we were one of the first to say this, it could be the iPhone moment for the financial markets, powered by Bitcoin, right? Like it is a game changer for the fixed income markets, because we've all seen the chart of Bitcoin's total addressable market. We've all seen it, the 400 trillion, and then there's this little, blip of which Bitcoin is, and you're like, wow, Bitcoin's just getting started. What Saylor figured out is that $400 trillion total addressable market, you need to create different products to tap into those different pools of capital. You're not going to be able to tap into the fixed income pool of capital unless you release a product specifically for that market. And that's exactly what Saylor has done with Stretch. And then, of course, if you want to take a more risky approach, if you want the volatility, if you're not interested in just the fixed, that fixed return, which of course isn't guaranteed, you go with the strategy stock, right? Which again has more risk, but it also has more upside. So Saylor right now is positioning himself and his company to be one of the powerhouses of the next decade. It's undisputed. And there's a little bit of a hint of that, right? Saylor posted the other day, he says, you have a car that drives you. What was the other thing? You have a car that drives you.
I forget. I'll find it. I know what tweet you're talking about.
So he's like, you have a car that drives you. And this is
an asset that pays you and
you have a car
else
that drives you, which of course he's referencing Tesla. Right. And the Tesla's undisputed advantage that it has. If you've ever been in a Tesla, you've turned on full self-driving. The car literally drives itself. And now that they're getting into robotics, right? And then that's the other thing he mentioned. He mentioned the robotics part. Also,
there you go. I got it. Read it.
You pulled it up?
Yeah.
So this is the tip. He says the 3 perfect products. The first 2 he's referencing Elon. Now, this is quite an interesting reference, and I'll give you guys a little bit of inside baseball. I remember when I was able to go to Saylor's house and we were like kind of a conversation, Elon got brought up in that conversation. I remember he was talking about it. And this is like a perfect reference to this. So he says there's 3 perfect products.
Sorry.
So there's 3 perfect products: a car that drives you, a robot that serves you, right? Again, that's alluding to Tesla's pivot, where they discontinued the Model X and the Model S to open that factory bandwidth to make robots, right? Autonomous robots. Again, this is going to replace a lot of the workforce, or at least that's the theory, right? And again, no pun intended, the name of the robot is called Optimus.
It'll never be me, though. Actually, it might be better than me in other ways.
Which is... which is hilarious. And then the last part, of course, he's referencing himself and he's referencing his product and his company. So it's a car that drives you, a robot that serves you. Those first 2 are Tesla. And number 3, an asset that pays you. Now, I did mention Tesla for 2 reasons. First of all, of course, Saylor explaining the perfect products. But guys, out of the Mag 7, one of the only companies in the Mag 7 that owns Bitcoin? It's Tesla, right? They hold about 10,000 Bitcoin.
And they haven't sold any, too.
And they haven't. No, they did. They had
well,
some
they did that one
initially. But then when they got comfortable with it, they are hodling this. And also there's rumors that Elon has a personal stack of Bitcoin as well.
And his kids have huge stacks,
Elon was in the room when the strategic Bitcoin reserve executive order was signed by Trump. Howard Lutnick was to Trump's right and Elon was to Trump's left. So again, just connect the dots here. We lay out the information, we lay out the source material, we try to connect the dots for you guys. This next cycle, it is looking for, it looks like we're ready for blast off. And before we went on air, Kent and I were talking. We were talking on air before we sent the show live. And Kent, you were essentially you were making the case that the last 2 cycles we saw kind of this muted price action, right? So could you elaborate a little bit about what you meant by that?
Well, yeah, I also am glad you brought up that tweet. I'm going to elaborate in just 1 second, but that tweet, it sort of is validating for a thesis I've had, which is basically Sailor is competing with Elon for God King of planet Earth. At least
Yep,
that's how I
yep.
see them both going. And it's great. I mean, we love competition. But what I was alluding to was that, from my vantage point, since the ETFs launched, and even before then, as institutional capital started to sniff around, we needed to go through a time period where Bitcoin digested Wall Street. And I think a lot of Wall Street confused that the other way around and thought that they were digesting Bitcoin. But here's what you can now see playing out, which gets me rabidly bullish. I'm not drooling, but I am quite bullish after seeing this news today, which is that just as like the pleb journey, the retail buyers, they set the bid at the bottom of the market every single cycle, and they're just constant buying caused the price to grind through all the shorts out there. Basically, Sailor is the buyer we needed but didn't deserve, it looks now. And I'm not going to paint him as some hero, but he was an actual Bitcoiner that understood the scarcity and played with big boy capital in the markets. And his continuing to buy now appears to be chewing through the Wall Street gains. And that's incredible for us because we have one of us in the chair with big boy capital able to do that and buy with conviction. So to me, the fact that you now see basically there's been this massive lid through all these financialization products that have been sitting on top of Bitcoin's price with the ETF. And you can see as they're unwinding because they can't handle the risk with absolute scarcity that Bitcoin brings to the market. Because he's sitting there gobbling up this Bitcoin and taking it off and storing it for his own. And that is how you defeat the financialization games that could be played with other products, including gold, right? Because you couldn't actually assay all the gold to make sure that all the gold is where it's said to have been. With Bitcoin, when it's pulled out of the game, it's out of the game. You can no longer buy Bitcoin to short Bitcoin. You can't play these financial games. And so Bitcoin, or Sailor, excuse me, has been playing the game, playing Wall Street against itself is what I see. So, I mean, the man's going to come out looking like a genius when it's all said and done, as long as he doesn't get too far out over his skis and puke out all his Bitcoin again because he got too levered up, which I still have some concern about. But as long as he can play the game the way it's currently going, it looks like he's got the lever to really move the markets here.
100%. And there's a couple things that you touched on, right? Which is this concept, and there's Max Kaiser who originally coined the term, right? Which is you don't change Bitcoin, Bitcoin changes you. And I think Wall Street had this, again, going in there, playing the Wall Street games, which they could with gold, right? And the reason they could with gold is because gold is scarce, but ultimately, if you see the price of gold, the inflation rate of gold is relatively stable. And the reason for that is if the price of gold goes up, then the economic incentive to, again, roll out more gold mines, right? It creates that economic incentive. So more people start mining gold. So it has a relatively stable inflation rate. Also, it's very hard to verify how much gold there actively exists in the market, in the world. It's very hard to verify that. With Bitcoin, Bitcoin's in stark contrast. We know that there's 21 million. So you could only play these paper games so far. We actually played a clip by Larry Lepard last week touching on this point exactly. These paper games, they kind of function as a two-edged sword, right? It's like you could play them until people realize, wait a second, why is there 25 million Bitcoin? And then that's when you see this crazy explosion to the upside. So I think Sailor essentially Trojan horsed Wall Street, and then Wall Street came in there, couldn't resist Bitcoin's incentives, which again, Alex Gladstein predicted many years ago in this very famous article called Bitcoin is a Trojan Horse for Freedom, where he was making the case that this is, by the way, this was before the ETF, this was before Sailor, this is before all nation states and any of that. He was making the case that Bitcoin is going to be so irresistible to institutions, to companies, to two nation states that they inevitably were going to let the Trojan horse in. But what they didn't realize is that number go up technology and freedom go up technology are inextricably linked, right? And I think this is the big reason as to why the Elizabeth Warren camp, which fundamentally believe that the future of money are central bank digital currencies, were so starchly against the Genius Act or the Clarity Act, because they know that once Bitcoin is integrated into the traditional financial system with the incentives that Bitcoin provides, it's going to be very difficult for banks. By the way, last week, we've been making this announcement. The Morgan Stanley head of digital assets, who's going to be making an appearance at the Bitcoin conference, went on Legacy Financial TV and said, this has been the most successful ETF launch in Morgan Stanley's history. Simultaneously, Citibank is making the announcement, hey guys, we are going to be custodying Bitcoin on behalf of our clients. Simultaneously, Schwab, right? The brokerage that initially denied Opti because he didn't have a certain amount of money to open an account, released an educational video on Bitcoin this morning because they're getting prepared for launching their spot Bitcoin trading on the Schwab platform, right? So if you connect all these pieces together, ladies and gentlemen, Wall Street isn't just here. They're actively making products on top of Bitcoin. But what I don't think they realize, and ultimately I don't think they're going to care, is that they're changing the system from within because of the incentives provided by Bitcoin. But unlike the fiat system that has a misaligned incentive structure, it's going to be very different. And I think it's going to be very surprising for people once they come to this realization. And again, Max Kaiser has also talked about this, that Wall Street can win. Strategy can win. Strategy can accumulate 1 million Bitcoin. But ultimately, if you're a holder of spot Bitcoin, you're benefiting from all of this, just like the rest of these institutions, from a percentage basis. And that is in stark contrast with everything else Wall Street has done in the past. And I don't necessarily believe that it's this grand conspiracy that Wall Street is doing this on purpose, that, you know, the rich are getting richer and the poor are getting poorer. It's just the very architecture of the system itself. It's the fiat system. It's the debt-based system that results in that outcome. So Bitcoin is, again, integrating itself into Wall Street. It's changing Wall Street from within. Wall Street thinks it could change Bitcoin, but ultimately it's going to be Bitcoin that changes Wall Street. And all the people that are spot Bitcoiners, cypherpunks, and they're like, Nico, why are we talking about Bitcoin? Why are we talking about Wall Street? Why are we talking about strategy? I think a lot of people are going to be pleasantly surprised when they realize, wait a second, and we've already seen evidence of this when Larry Fink is at Davos, literally talking about, at the Davos desk with the snow in the back on CNBC, and he's literally talking about, you know, how Bitcoin is a, quote, non-sovereign alternative. Those are BlackRock's words. Those aren't my words. Those aren't Simply Bitcoin's words, right? And why is Larry Fink doing this? Why is Morgan Stanley doing this? Why is Citibank doing this? Because they all think that they're going to benefit from number go up, but simultaneously, the holders, the plebs, the people that got in earlier, the people that don't have as much capital, the people that got into Bitcoin because they saw it as an escape valve, right? They're going to benefit equally from a percentage basis as these large institutions, as number go up does its thing. And that's the revolution. That is the revolution, ladies and gentlemen. You're seeing it play out in real time. And going back to Trump, because we were giving a lot of heat to Trump, over the last couple of weeks, there's a lot of decisions that he's made that we might not necessarily agree with. Ultimately, this previous election had a huge consequence. It had a massive, massive, massive consequence. And that consequence was that Bitcoin went from being an enemy of the previous administration to now being integrated to the current administration. You have Howard Lutnick, who's a Bitcoiner. You have Trump's family. The president's son is going to be making an appearance at the Bitcoin conference. Even if the Democrats win the presidency in 2028, I think it's impossible to reverse all of this, because that's at least another 2 years of Bitcoin benefiting Wall Street. And ladies and gentlemen, if you know anything about American politics, it's really Wall Street that makes the rules. Remember, guys, the BlackRock Bitcoin ETF, despite Gary Gensler dragging his feet, despite the protests of Elizabeth Warren, despite Biden being in office, the Bitcoin ETF was launched during Operation Choke Point 2.0. That tells you how much influence BlackRock has. So despite all the ideological reasons, despite or whatever, they cannot resist number go up technology. So this is a revolution. This is a transformation of the United States financial system, and Bitcoin is the foundational base layer of all of these things. And I completely agree with Kent, and I also agree with Opti. I think that these paper games are going to blow up to the other direction, because again, there's only 21 million Bitcoin. Eventually people are going to realize, hey, wait a second, why is there 25? Right. And I think that is going to be the major catalyst for an explosion to the upside. Last thing I'll say, because I've been rambling and I want to hear more of Ken's thoughts, is I don't think the markets have realized Bitcoin's absolute scarcity. I don't think they've come to that understanding yet. I think the moment markets sniff and they come to the realization that, wait a second, this is the only asset in the entire planet that no matter what, they can't make more of. And not only that, because of the halving cycles, the amount mined per halving actually decreases. I think you're going to see fireworks, the likes of which we've never seen before. The infamous, and I call it infamous because it was called too early, Omega candle of 100K. I think we're going to see that sooner rather than later. Now, does that mean it's going to happen this year or the year after? No, but I wouldn't be surprised if we saw it within a decade. Right, within this decade. I would not be surprised if we saw $100,000 price movement in a day. Right, it's that type of setup that is forming right now, that type of foundation. Right. Anyways, Kent, I want to get your thoughts. Am I a crazy man? Am I seeing things that are not there? You're a miner, man. So I touched a little bit on the halving and how that plays into the scarcity aspect of Bitcoin. What are your thoughts, Kent?
No, I'm on your train, man. I'm riding the ride with you, bro. The setup here is really crazy. When I look at it, I mean, today, right? 450 Bitcoin are mined per day. That is protocol limited. Can't change it. It is what it is. Every 10 minutes, a new block is mined. 3.125 Bitcoin plus transaction fees are the reward. So if you look at it, 450 Bitcoin per day, and what was the last purchase? Like almost 10,000 Bitcoin that Saylor did, and that was the week after. 20,000. I mean, it's insane how much supply is being gobbled up, much more than can be produced. And guess what? 2028 is when the halving happens. And when that happens, 225 Bitcoin per day are going to be produced. So the rates and the numbers just don't match up. And Wall Street has never dealt with anything that is absolutely purely scarce. Humanity has never dealt with anything that is absolutely scarce. Everything that is out on our planet that can be produced and used as a monetary good, the price goes up, you can go out there and figure out how to get more of it, right? Like, this is the first time in human history that we've ever had to wrestle with digital absolute scarcity. And so as a result, I don't think the markets could price this in. I think we're on a price discovery journey with it. And I think that if you look at the last two cycles, is basically institutions coming in, starting to play derivative games with Bitcoin, rehypothecation. I think that we've been digesting Wall Street sentiment, and I do agree with you. And I think it's sooner than later, not in the next year and a half, but I would not be surprised if, like, what we're talking about here is like phase shift Monday, where we're going to see a shift at some point where people are just going to break through and start buying. Like, let me give you guys some numbers that I talk about in one of my presentations, right? Global M2 right now is $110 trillion. Global M2 is liquid capital. liquid capital, right? This isn't stuff that's stored away in assets. This is just the money that's on the market. And when they quote that number, guess what? They also don't count smaller developing nations when they talk about global M2. It's the major economies. $110 trillion. If you look at Bitcoin right now on exchange and you multiply out that there's about 2.2 million on exchange and you multiply that by 75,000, about the price of today, guess what? It's not even a fraction of global M2. And that's like stage 1 of global adoption. So it is quite likely, in my opinion, that, and it's part of what I'm building for here at SAZ Mining, is that there will come a point where you can't go to an exchange and buy Bitcoin. You're going to have to figure out a way to earn Bitcoin. And that's going to be a radical different reality, because absolute scarcity is going to kick in at that point, and people are going to price their goods and services to be able to extract the Bitcoin from the people that have it. And then medium of exchange comes after that. But we've got so much free floating fiat capital that's out there that is going to eventually wake up and realize it wants Bitcoin, that I don't see how anything can happen other than a dramatic step change in the price when it does. Supply and demand are just not going to meet at all in that moment, and price is going to radically adjust. And does that make it the Omega $100,000 candle? Probably. I mean, I don't even know what reality looks like, but I will say, for all of our sake, we want this to go more gradual than slowly, because our financial markets need to adapt for all of our health and benefit, right? If there's a sharp break, like, it's going to be chaotic in a way that I don't think any of us are really going to be happy about. And frankly, most of us Bitcoiners are going to want to duck and cover a little bit to stay out of the limelight when that happens. So let's hope that doesn't happen. And let's hope we have a nice, slow, gradual shift from fiat to Bitcoin.
Absolutely. 100% agree with you. Opti, thoughts?
Yeah, no, I mean, I completely agree. And I really like the phase shift Monday. We might be a little too early to call it phase shift Monday today, but we'll try to keep that going. It does seem, though, like it's happened a lot slower than we probably imagined it was going to. And that's kind of how it always works with us Bitcoiners. Like, we're living in the future and we think things are happening very fast because we're watching all of the news play out. But in the day-to-day, it seems like it takes forever. But I think what we are seeing, and it will take a little more time, is I think Saylor is literally putting on a masterclass right now. And I know a lot of people have turned a little negative on Saylor recently because he's talking to a more corporate Wall Street kind of audience at this point. He's doing the orange pill in terms that they understand. And he might have just pulled off the biggest Trojan horse on them, where they think they're, like Ken said, they think they're coming in here and they're going to control Bitcoin. In reality, it seems like maybe Saylor psyoped them into pumping his bags, and he is going for the God King role right now. So very interesting time, to say the least. Obviously, it could be just because the price is feeling a little frothy that even Nico's starting to feel a little bullish. But man, it is a very interesting time right now if you're watching not just the Bitcoin price, the global markets, the amount of interest coming into Bitcoin, the amount of news that is playing out around Bitcoin. I think it's going to end up being a very interesting year, and we're probably all going to be a lot happier by 2027. We're like, okay, we're back, guys. And I'm with Kent. I would love to see this cycle blow every other cycle out of the water, because the last two cycles have been very disappointing. And I know a lot of people are like, man, I missed all the gains in Bitcoin. Why would I want to buy Bitcoin if it's only going to go up 20, you know what? I forget what the last cycle, if it's only going to go up about a 6x, what's the point in this? This might be a crazy, crazy bull run. It really feels like it's the gradually then suddenly meme playing out, and that gradual could play out longer than we expect. But when that suddenly comes, we're all going to be very happy that we were hodling and holding Bitcoin and you know, feeling like idiots for, at this point, 5 years? But hey, it's still coming, guys.
Absolutely. I 100% agree. Guys, it's going to be a fantastic show. We have tons to cover. We have updates. Oh, 600 live viewers on YouTube alone. That's air horns. So anyone who's watching the show, smash that like button, consider subscribing to Simply Bitcoin, and stay tuned because we still have a hell of a show for you guys. We're going to be talking about wild sats later. We're going to be talking about the Clarity Act. We have a Roman Storm update on mixers, so regulatory update, and also Matt Hogan he's dropping the price predictions again. He's calling for $1 million Bitcoin
back on the
he's
table,
calling for
boys.
$1 million Bitcoin, and he describes what the catalyst is going to be. So all of that, again, extremely interesting. You guys are going to want to stay tuned. We're going to be right back in just a sec. Today's episode is brought to you by Bitcoin Well Infinite. If you're a serious Bitcoin buyer, you've probably hit the same wall. Most platforms make you give up custody just to play by the rules. Bitcoin Well Infinite fixes that. They're North America's only publicly traded, non-custodial OTC desk listed on the TSX Venture Exchange, which means transparent operations and zero counterparty risk.
You buy Bitcoin, you take immediate control, period. For trades over $50,000, you get a dedicated executive Bitcoin advisor, competitive spread starting at 1%, and immediate delivery straight to your own wallet. No custody risk, no withdrawal fees, just institutional grade execution with full asset control. If you want to buy Bitcoin the right way, book a free consultation at bitcoinwell.com/OTC or email infinite@bitcoinwell.com.
I want to give a shout out to our partner, StampSeed. Is your Bitcoin in cold storage really secure? Are your seed phrases really secure? StampSeed's do-it-yourself kit has everything you'll need for you to hammer your seed words into commercial-grade titanium plates instead of just writing them down on paper. Paper is fragile. Titanium plates are strong. Your words are actually stamped into the titanium plate with this hammer and these letter stamping tools. Once the words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamp seeds will survive nearly triple the heat produced by a house fire. They're also crush-proof, waterproof, non-corrosive, and time-proof. And now you can customize your titanium seed plates. You can upload your design or logo, and they will laser engrave it on the back of your seed plate, the opposite side of where the words are. Stamp your seed on StampSeed and use promo code SIMPLY to get 15% off anything on the stampseed.com store. All right, everybody, we are back. At the time of recording, the Bitcoin price is $75,780. Sats per dollar, 1,320. Block height, 945,949. Realized monetary inflation, 0.83%. Market cap, 1.5 trillion. Bitcoin versus gold market cap, 5.05%. Percentage issued, 95.32%. Decline from all-time high. If you're buying Bitcoin right now, you're getting it at a 39% discount. So it's probably a good idea to smash that like button. Anyways, I don't want to delay it anymore. Here's Matt Hogan talking about $1 million Bitcoin once again. Matt Hogan is the CIO of Bitwise Asset Management. Let's check out the clip.
Put it that way. You mentioned a $1 million Bitcoin. Talk to me a little bit about timeline there, or what needs to happen for us to get to a $1 million Bitcoin floor.
Yeah, I mean, what we talked about in our long-term capital market assumptions is that all you need to get to $1 million Bitcoin is for the store of value market to continue to grow the way it's been growing for the last 20 years. That market has grown at a 12% CAGR for the last 20 years. If that continues for the next 10 years, and Bitcoin ends up with like 15, 17% of the market, it's at 6% today, you're talking about $1 million Bitcoin. So you don't need much to get there over a 10-year period. In terms of what could accelerate that time frame, things like what happened recently, where Bitcoin as a currency finds space in the world, could significantly accelerate that. Progress on the regulatory front, if we do get good news on the Clarity Act, that would significantly accelerate that. But I don't think that much has to happen in order for us to get to that $1 million price target within 10 years. Again, just the market continues to need to go in the direction it's been going for the last 10 years. If you extrapolate that trend, I think we'll get there.
I mean, what do you think, Opti?
I think $1 million in 10 years is bearish. No. I'm kind of trolling. But I think this framing, well, first of all, I think it is a little early, and maybe that's just like a general summary of where we are in the markets, like we are starting to feel a little better about the price. Now, obviously, that is this week. This is this Monday. This is on Phase Shift Monday, but who knows? Next week, maybe Trump tweets something and the markets get nuked again. So in the current moment, with that in context, I really like this framing in terms of it's really not that insane when you think about it. Like, obviously, in the early days, I remember when I got into Bitcoin in 2017, 100K was like, it might get to 100K. One day it's going to get there, but all of these things need to play out for it to get there. And then we hit 100K. We all knew it was going to get there, but it was still a big, like, if this catches on, we're going to go there. Now, if you really read the context here, kind of like between the lines, I don't think any of us here in Bitcoin, if you understand what's going on currently, like if you're taking the initial news story, if you're taking all of the big news that we've been covering in the last few weeks, that literally every bank, hedge fund, asset manager, even states, or, nation states and countries in the world, they're no longer looking at Bitcoin like it's this dumb thing that's going to go away. They're starting to actively research Bitcoin in a way that it's never been treated before, in a way where it's like, I have to own this thing. So with that in mind, this idea now, it's like, look, not that much has to happen for Bitcoin to 10x here. Well, all right, I'm using the 100K line, basically. 10x from 100K is $1 million. It's like it's not as crazy as it sounds. Unless you're someone that's kind of still new to Bitcoin, you're like, oh, this thing could never go that high. They just really don't understand how Bitcoin moves. Maybe they have this idea that, the bigger the market cap, the harder it is for Bitcoin to move up at these crazy exponentials. But when you put it in the context, especially if you consider what's going on with Stretch here, it's not that much capital in the context of the global liquidity pools, in the context of all of the capital in the world, all of the money in the world, just to put it nicely, it's not that much for Bitcoin to make crazy moves, especially if your time frame is what, 6 years to 4 years.
But it's not only that, right? It's like, if you take a look at how much Stretch is buying weekly, they're buying more of the weekly mined supply, and that's just Stretch. That's not talking about BlackRock. That's not talking about the sovereign wealth funds. That's not talking about anyone. That's just one product, right? So this goes back to what I was talking about earlier. I don't believe Wall Street has woken up to the realization that Bitcoin is truly absolutely scarce. And I think once that realization snaps, once it clicks, I think that's where you're going to see those price movements. Now, going back to this, because again, we have been kind of like in this 5-month kind of bear trend, and the price action hasn't been all that great, et cetera, et cetera. Like, guys, when Bitcoin in the early days, I remember like 10 years ago, I remember when Bitcoin was at like $600-700, it was unimaginable that it could even get to 10,000, right? Like it was inconceivable. It was like, this is impossible, right? And I felt late. I was like, no, this is impossible. Like, this can't happen. Like, that's more than a 10x move. Look at how big its market cap is now. I mean, like, that's almost impossible. And Bitcoin did that, right? That move from 700 to 125,000, right, is absolute insanity, right? So are you trying to like convince me that, and again, it's not a 100x move. Are you trying to convince me that in the next decade, we're not going to at least see potentially a 10x move, especially with all the things we've been talking about, specifically in the beginning of the show? Like, and someone I saw in the chat was like 1 million would be a disappointment. We should be going a lot higher, and I tend to agree with that. But again, this is someone who is associated with a publicly traded company. He can't go full bulltard.
Can't go full opti on him.
He can't go full bulltard. So yeah, anyways, I want to get your thoughts, Kent.
Wait, before we go, remember we were saying 1 million by 2030, and we're like, that's totally going to happen. Now it's like 1 million in 10 years. I think that's bearish.
So, and again, I want to get your thoughts on this, Kent, because again, you are a Bitcoin entrepreneur, a successful one. You run a successful Bitcoin company. You're the CEO. of a company in the space. And anybody that has a company in the space, it's completely tied to number go up, right? Every single company in the Bitcoin ecosystem is dependent on number go up. If number doesn't go up, things start to break in the Bitcoin industry, right? So I want to get what your take is. How are you planning, for your personal future, your personal finances? What are you planning for your company's finances? What are your expectations, at least by 2030? And guys, 2030 is not that far away. It's 3.5 years away.
He did say 10 years, though.
I know, but I want to talk about
I'm with
2030.
the 2030.
So I want to get your thoughts on this, Kent. Like, what are your thoughts, man? What are you thinking by 2030? Like, what is the base case for you? I think you're muted, my friend.
Can't. You're muted. You're muted.
My bad. I was all excited there. But we're all in. 2030, right? Is $1 million. We can get rid of the 10-year garbage, right? Because that just seems ridiculous to me. I mean, so I go back to something quite similar as you were talking about, Nico, right? Like I got in, I think, similar time, late 2015, and the prices from then to 100K just seem absurd. And so for me to now look at 100K to $1 million, that seems highly probable now. And maybe it's just the journey that I've been on and when I adopted Bitcoin, but it just doesn't seem absurd. Now, the amount of dollars that have to flow in is quite large, the trillions, right, that have to increase the market cap to that level. However, it's like the journey that we've been on so far. I mean, let me go back and just use an analogous situation. This is a third business that I've been a part of scaling, right? Helped this business go from 2 people to now we got 15 staff at SAZMINING, and 2 other companies in the rooftop solar space. I was like employee 16 and helped to scale it to 250. And then I was at another company as like employee 55 and helped to scale it to 350. And I will tell you, the first 15 people here at SAZMINING have been so much harder than it was to go from 16 to 250 people. And that's because the start is always the hardest part, to get product market fit, to get the marketing messages right. And why would it be any different for Bitcoin, right? And we've just gone through year 17 of a product that is meant to disrupt what we have defined as money for 5,000 plus years. Why would we think that would go super quick? I mean, I'm guilty of it myself. I thought we'd be $1 million sooner, given the last couple cycles. I thought 2017 cycle was a harbinger for what's going to come, right? I thought all the next cycles would be that way. And as we've already talked about, they haven't. So, okay, it's going to take a little bit longer, but to go from 100,000 to 1 million, a simple 10x, that doesn't seem absurd to me to happen in the next 4 years, especially with halvings coming up in 2028, where we go from 450 Bitcoin a day to 225, and the Michael Saylor's buying thousands upon thousands on an almost daily basis now. I mean, it's crazy. It just seems like a supply-demand mismatch. And so come back to the very beginning of what we've already talked about. Like at some point, kaboom happens, and we go really up from there. And I will just mention like the simple 10x, right? Like if you just look at the bottom of the last cycle, was like 15.8K, something like that, 15.6K. We went to 126K. So the idea of a 10X is not that extreme over a 4-year time period, because it was pretty close to that for what we did just this last cycle.
Absolutely, 100%. And as you said in the beginning of the show, I believe these previous 2 cycles were muted, right? Like this previous cycle, yes, 16,000 to 125. That's a huge percentage return. That's fantastic. But we never had a euphoric phase. I believe a lot of that euphoria was, we did have a euphoric phase, but it was in the treasury companies. And then the cycle before that, I believe that cycle was cut short because of the China mining ban, right? Because you see there's a direct correlation between the first peak, China bans the CCP bans Bitcoin mining, hash rate drops 50%. Of course, those miners have to sell Bitcoin to relocate to other more favorable jurisdictions. So the cycle 2 cycles ago, cycle was cut short because of the China mining ban. I think we were destined to reach 100K that cycle. That's my opinion. We only reached 69, and we had this weird double top. And then this previous cycle, we never had a euphoric phase whatsoever. I think it was a cycle that tapped on it topped on apathy, right? And again, you had most of the alpha in the treasury companies. So I think that this next cycle, we are destined. This is my belief. We're destined to have that traditional run up, which again breaks that narrative of the diminishing returns, right? So, anyways, only the future will show this, right? We're speculating here. We're trying to connect the dots. We're reaching assumptions based on the information that we have. Everything seems extremely bullish. But at the end of the day, time will tell, right? And as I've said a couple weeks ago on the show, I said, Bitcoin needs to prove itself, right? Because just like it proved itself when it went from $100 to $1,000, just like it proved itself when it went from $100 to $10,000, just how it proved itself that it went from 10,000 to 100,000, even though we all believed that was going to happen, despite those hardcore beliefs that we had. You can have those beliefs, but unless it actually plays out in reality, it's not real yet, right? So it's kind of like you have the game theory, you have everything set up, you have all the stars and planets lined up for that trajectory, but it's still, it reminds me of like that very famous video, which I think I forget what company they made an ad about this, where they got the same guy that was like, "Oh my God, Bitcoin's breaking $100."
Yeah, don't buy Bitcoin; it's gonna crash again.
Yeah, and no, but there's this other one where he's like pointing at an old TV and he's like, "Bitcoin just broke $100 or something like that." Like it's the type of thing where like you need to live through to actually believe. Right. It's like you can read all the books you want, but unless you live through it, that's where it's at. So I think the next stress test for Bitcoin, where Bitcoin needs to prove itself, is can Bitcoin get to that $500,000, $1 million region? And I think there's a very, very high probability that it does.
Can I add a different angle on this? It's not just can Bitcoin make it to $1 million. It's really like, can Bitcoin survive Wall Street? And I think that's that's the big question.
I don't think Bitcoin is surviving Wall Street. I think Bitcoin is co-opting Wall Street.
Well, I know, but I think because we all had that idea, like, all right, we've actually gotten a lot of flack. It's like, oh, here's Simply Bitcoin cheering on the institution. It's like, well, yeah, we thought they were going to pump our bags. And now we're realizing like they're not going to co-opt this thing. They're going to get co-opted. And that's, I think, the big test, but only time will tell.
Anyways, I see a comment, which is a perfect segue for the next segment. We're going to be talking about Clarity. Somewhat Down Under Blues says, maybe Clarity needs to pass to help get new investors. We had Frank Holmes, executive chairman of HIVE Digital Technologies, the first publicly traded Bitcoin miner. He came on the show and we were talking about Clarity, and he and someone else from HIVE came on the show, and Frank said, quote, if Clarity passes, we're going to see at least $250,000 Bitcoin, because it's in the name. It's going to provide clarity. So we have an update for you guys on that topic specifically. We'll be right back in just a bit. I want to give a shout out to our partner, Ledin. Here's something most Bitcoin holders never figure out until it's too late. You're sitting on wealth you can't touch without selling. Ledin fixes that. Bitcoin-backed loans. You keep your stack, you get cash. And they just introduced their lowest rates ever. No complexity, no fine print. The larger the loan, the lower the rate. These new rates apply to all new loans, refinances, and renewals. You'll see all the rates up front before you apply. The new, lower rates come with Ledin's gold standard protection. Your Bitcoin remains custodied and is never lent out for interest. Perfect 8-year track record of keeping clients' assets safe. Auto top-ups, LTV alerts, and partial repayments to keep you in control. Repay whenever you want with zero penalties or monthly payments. Ledin's perfect $10 billion track record through every market cycle in the last 8 years speaks for itself. Don't choose between a great rate and the safety of your Bitcoin. Get both at Ledin. I want to give a shout out to our partner, BitKey. If you already self-custody your Bitcoin, you already know the deal with hardware wallets by now. Complex setups, clumsy interfaces, and a seed phrase that can be lost, stolen, or forgotten. BitKey fixes that. BitKey is a multi-sig hardware wallet built by the team behind Square and Cash App. It packs a cryptographic recovery system and built-in inheritance feature into an intuitive, easy-to-use wallet with no seed phrase to sweat over. It's simple, secure, self-custody without the stress. Time named BitKey one of the best inventions of 2024. Get 20% off at bitkey.world. That's BITKEY.world with the code SIMPLY. All right, everybody. So yeah, I have an update for you guys from Legacy Media. Again, this is front row and center, right? You have Treasury Secretary Scott Bessent advocating for it. You have the White House advocating for it. And again, this is being talked about on Legacy Media, right? This is front and center. This is how important it is. And is, again, a big part of the Trump administration's agenda. And they have until November to pass it. Clarity is so important. Let's check out one of the latest clips.
I can understand the banks being upset with Coinbase and other companies because they were forced to accept this, I think. I mean, initially, many of the banks were saying, well, no, we're going to get there, but we're not there yet.
Yeah, look, I mean, really interestingly, we have actually partnership with some of the biggest banks around the world, including the biggest U.S. banks, because they understand the future is tokenization and stablecoins. They're looking for a partner to build with. We're excited to be the partner of the biggest banks, but the Beltway is a funny place, Maria, as you know. There's a kind of an ecosystem of people who spend all their time fighting over things in Congress.
Yeah.
There's a bit of a disconnect with what we see in D.C. and what we see with their business folks.
Yeah.
I think we'll be able to resolve that. The banks are critical as a part of this future, on-chain future. I think there's a lot of opportunities for them.
Right.
We want to help them get there, and I think we're excited about that.
So right now, you can pay, the legislation as you know it will be that, yeah, you can pay rewards if you're part of a membership program. Real quick, explain where you're expecting clarity to land.
So the law of the land is if a customer has a balance on our account, we can pay them a reward. The banks have got really concerned about this. They said, no, there has to be some activity before you qualify for the reward. We've conceded that point. It's just a matter of how what the fine print looks like, and I think we'll get there.
So the reason that this is such a big hang up is, and I've explained this a couple times, right? The reason that the banks see Clarity Act as such a threat and the way that it's currently structured is that banks don't currently, most retail banks, not only do they pay very, very little interest on deposits, right? Because fundamentally, like, a bank is making money off of your money, right? So technically you should be getting paid for that. Back in the day, you used to be able to get interest on deposits in a bank, right? And the banks are freaking out because Coinbase is going in there. And I already have friends, by the way, that like don't even have a bank account. They just use some of the new apps like Cash App and stuff like that. And the banks are freaking out because they're basically coming to the realization that, like, wait a second, like, what if people just don't have dollars in accounts, period, because they can just leave it on Coinbase and they're going to get a 3-4% interest paid in Bitcoin. What's going to happen to our deposits? Like, why would people leave money in the bank? And by the way, not only do they not pay you interest, they charge you a monthly maintenance fee if you have below a certain balance, right? So it's a 1-2 punch. And then Coinbase is going in there as an innovator and saying, listen, and I love the word he's using, right? And they're being political, right? It's just like, we'll pay you a reward. Again, it's just interest. It's a form of interest, right? That reward is directly correlated to the amount of, USDC or whatever, whatever token that you have on the platform. So, and that's really the big holdup. That's really what's holding Clarity Act up. But it seems like it's coming to a resolution. Tim Scott was talking about it. Tim Scott is the head of the Senate Banking Committee for the Republicans. Again, really championing this bill forward. And of course, you have the Bitcoin Senator Cynthia Lummis. And again, she's been pushing for this as well. You have pressure from the White House. So again, unfortunately, this is the way that U.S. legislation works, where like part of the legislation groups in that are not things that are Bitcoin related. What I'm personally excited about with Clarity is not only, again, providing regulatory certainty for companies and institutions, but it actually protects the right to self-custody. It enshrines that into law, which I think is incredibly important as a Bitcoiner. Of course, you would want just a bill to get passed just enshrining that, but that's not the way that legislation works. Unfortunately, all of these things need to be grouped into one bill. But that's just the way it is, right? So I have to check the latest poly market odds, but that's the latest update on the Clarity Act. I think that if it gets signed into law, currently it's at a 48% chance, down 17%, Opti. But if it gets passed into law, Frank Holmes quotes, we'll see $250,000 Bitcoin. If it doesn't get passed, I don't think this type of legislation is going to get passed in a while. Because it looks like the Dems are going to take the House in November. They might take the Senate, and they might take the presidency in 2028. So, you know, the clock is ticking for this type of law to get passed. So it's already passed the House, but the House only needs a simple majority. In the Senate, they need a filibuster proof vote, which is at least 60 votes. They need that 60 vote threshold, which means it needs to be bipartisan. It can't just be advocated for by the Republicans. So anyways, that's the latest on the Clarity Act. We'll keep you guys updated as this develops. But again, this is a major talking point on legacy media, on Capitol Hill. And yeah, let's see what happens. Anyways, Opti, I want to get your thoughts. We've been covering this for a while, man. It was April. Now it's almost the end of April, right?
And now I'm seeing they're saying like maybe May,
right?
Like,
so this needs to get passed. This needs to get passed. And it's not helping. Also, this is why we talked about this. It's not helping the conflicts in the Middle East. I feel like it's taking away a lot of the focus from things like this, from the national agenda, right?
Okay, here's my take. I might be a little less bullish on the Clarity Act as you. The only thing that I think is bullish of this is like there are people waiting on the sidelines for the Clarity Act to pass. So that's probably like in my opinion, the only good thing that'll come from this, but from not just the betting market odds, but really from a lot of the updates we've been hearing. Though last week we did get probably the most significant update that it seems like this stablecoin reward thing has been resolved. The list of basically things they disagreed on from both sides of the aisle, and also from the Bitcoin crypto industry and the banks. It's gone from like 12 disagreements down to like 2 or 3. Now, I guess that's improvement. But again, I keep saying the same thing. We've been seeing this get kicked down or delayed time after time after time. We were supposed to have it end of last year, and then January, February, March, April. Now we're starting to hear like maybe May. So look, in terms of it passing like quickly, might not happen. In terms of it actually passing, obviously those odds are going down. I think if it doesn't happen, I guess in the latest self-imposed deadline in May, it's probably not a good look because the midterms will start to ramp up and take all the attention. Though my biggest part with this wasn't so much it passing per se, but from the, I think it was chief investment officer, chief policy officer at Coinbase. I don't know, guys. It kind of sounded like a lot of shitcoinery there. It's kind of what I've been saying for a while. You know, Wall Street shitcoin phase is going to be crazy because he verbatim said Wall Street is very excited about tokenization and stable coins being the future. And in that statement itself, I'm like, no, like it's Bitcoin. All right. Wall Street's shitcoin phase is going to be insane. This tokenization, all the things, you know, everything on the blockchain, it's probably going to be a huge disaster. And that's probably why this Clarity Act has been held up for so long, because what we are seeing, what hasn't really been talked about much, is that there is a huge lobbying effort to end the Clarity Act at large. So like we are seeing a lobbying war play out currently in regards to the banking industry and the Bitcoin, quote, crypto industry. And as we've been covering, we really don't have the pull yet in DC. Like, we're a growing industry. Our influence is growing. We obviously had I would say, significant effect on the last election. But as of now, we are still a very young industry in terms of like the banking, lobbying, just size. And so we really don't have the pool yet. But look, I know it's a politician's job to be extremely bullish about, what they're doing, and that's kind of their job. So, hey, we'll see what happens. If it passes and it actually is a benefit to our industry, and it does what Frank Holmes says, once it passes, we're freaking getting pumped. Like, I'm all for that, obviously. Like, I just want them to pump our bags at this point. But in terms of it actually playing out, there is a ticking clock right now. And if it doesn't happen sooner, then as Senator Lum has said, it's probably not going to happen for a few years. So they really do want to get this pushed through. Like, it basically has to happen now. So we'll see what happens.
Kent, quick thoughts before we move on to the next segment.
I don't think it matters. That's my quick thought. I don't think it matters in the scheme of things because Bitcoin's going to win. And the reason why it doesn't matter in the scheme of things is because Bitcoin's adoption is going to take the path it takes regardless of how politicians influence the market, right? Because the market's going to wake up to absolute scarcity, right? If we look back 2 weeks ago, Iran accepting tolls for oil tankers passing through the Straits of Hormuz. How was that on anybody's adoption path, right? But was there ever any better marketing on a global scale than Iran taking Bitcoin and proving to the world that it was uncensorable and the strongest military in the world couldn't stop them? No, that's best marketing ever. People are going to adopt this regardless. So I see if the US politicians fail to push through the Clarity Act, which I do think is a positive for Bitcoin's price action, it's going to lead to other people in other parts of the planet adopting Bitcoin and saying, hey, the US isn't going to pick up the ball and run with it, then we're going to run with it over here. And so some other place is going to have mass adoption and will take the benefit themselves. I mean, we are dealing with a decentralized protocol that does not have a lock on the US market, right? It is going to break down the exclusivity of the US market, in my opinion. So whether this happens in the US, it would be to the advantage of the US and American citizens like myself and you guys on the call. But if it doesn't happen in the US, it's going to help in someplace else because that is how Bitcoin adoption occurs. It doesn't care. It's the honey badger, and it's going to be adopted because it's absolutely scarce. So, at the end of the day, I'd love it to pass, to pump the market sooner, great number go up, but it doesn't matter. The number is going to go up. And frankly, what we've been just talking about most of the show, which is Michael Saylor and his strategy, does the Clarity Act actually impact his strategy in a negative way if it doesn't go through? I mean, look at what he's done without it. I don't see how that doesn't continue. So I think it's great for the market, but I just don't think it matters.
Now listen, that's called motherfucking bars.
So yeah,
Damn, I love that song.
So 100% agree. And this is what Trump's case for it. He's like, listen, like the reason his argument is basically like, look, like if we don't do it, another country will. And I'm really glad that you brought up the example of the Strait of Hormuz, because that's exactly what we saw. Right. We literally saw a country that, again, has been sanctioned. They don't even trust their own currency. And they're like, pay us in Bitcoin. We know it won't be censored. Right. So this Bitcoin adoption is going to happen, by nation states around the world. And it's really up to the United States. Like, I went to a conference in El Salvador in the beginning of the year, and I saw a talk I actually got to introduce him because I was emceeing the stage. And I saw a talk by the head of the regulatory body for digital assets in El Salvador. And the guy was wearing a Bitcoin tie, right? And they're so far ahead with their legislation than the United States, which, again, the United States is supposed to be like, the pinnacle of world capitalism. And you have El Salvador that is leading, right? It's Bitcoin country, right? So yeah, I 100% agree with your take, Kent. Not only does it not matter, the United States is playing with fire. The regulators are playing with fire because, again, if you create a hostile regulatory environment in the United States, people are just going to go somewhere else, right? And then those countries are going to benefit, and their governments are going to benefit from the additional tax revenue, right? So the game theory starts to come into play here, right? So I think the Trump administration realizes that, and apparently the rest of the legislation doesn't believe that. And I think the rest of the legislation, like, they're hell bent on this idea that the future of money is central bank digital currencies. I think part of the big motivation as to why these pieces of legislation haven't been pushed forward is because I think fundamentally there's a big part of the American government that believe that the future of money is CBDCs. And I think that it's going to be a hard pill for them to swallow, for them to realize that, look, I think if people are going to have a choice, listen, you can't make Bitcoin go away. And I think if people have a choice between something that is censorship resistant and absolutely scarce versus something that can be debased and can be censored, I think inevitably over time, people are going to choose the better money. Right. So anyways, guys,
you have a lot of faith in people. I'm trolling.
We're going to be talking about wild sats, Saz mining, and we got the CEO, Kent, in the house. We're going to be right back after the break. I want to give a shout out to our partner, HIVE Digital Technologies. Fueled by clean energy, HIVE has quadrupled its global Bitcoin mining footprint and channels that same scale into high-performance compute, where their AI cloud is now ranked #1 in the world for network performance. At HIVE, you've got dual engines, Bitcoin and AI humming, roaring, accelerating in unison. They're lean and mean, they're green and clean, and they're rewriting the playbook on sustainable digital infrastructure. You can catch the latest buzz at Hive Digital Tech or at hivedigitaltech.com.
I want to give a shout out to our partner, sat123.com. Sovereignty isn't just about your money. It's about your communications too. When the grid goes down, most people go dark. Cell towers fail in hurricanes, cyber attacks, and blackouts. But satellite phones, they don't rely on local infrastructure. Iridium has 77 satellites in orbit, giving you a direct line anywhere in the US, even offshore. If you hold your own Bitcoin keys, you should hold your own comms too. Sat123.com also has everything you need to start building your Bitcoin citadel. Starlink, battery backups, Faraday bags to protect your hardware wallets, and much, much more. It's a one-stop shop for anyone serious about resilience and off-grid independence. Stay connected, stay independent, stay sovereign. Go to sat123.com/simply today and use promo code SIMPLY to get 15% off anything on the store.
We're back, and we got Kent. Kent, welcome. Saz Mining, Bitcoin mining as a service. How you doing, Kent? How are you feeling today?
I'm feeling. How are you, Nico?
I love it. Man, so I've been...
Wait, can I put context here? Kent's been with me, and Nico's been ditching Kent, and we brought Kent on because Nico felt bad.
Why do you say that? Why do you say I've been ditching Kent? Like, it's like that makes it seem like I'm doing this on purpose.
I know. We've been just trolling you. Me and him behind the scenes have been trolling you. It's like, hey, dude, I'm sorry, Kent. You're stuck with me today. Nico's got some plans, and we're just like, dude, it's like he doesn't like you anymore, Kent. What's going on here? And then Nico literally is like, all right, Kent, I'm going to get you on. I'm going to be on the show.
I think... And one of the best shows we've had in a while.
It's true. I
think Kent smells incredible. I'm going on record.
Pause. Okay.
It's an inside joke. It's an inside joke.
You should have kept that one to yourself. But anyways, keep it going.
Are you not entertained?
I mean, maybe some people are.
Anyways, Kent, how you doing, bro?
I'm doing good, man.
Let's talk about.
I'm doing good. I did have fun trolling you with Opti though, and I just to bring the audience in, I accused Nico of thinking I smelled bad. Is why he hasn't been on with me 4 times in a row. I should admit.
Yeah.
Opti and I have really bonded. You know, so we're doing well, Nico. I'm glad that the guild turned into another showing here, but it's good to have you here, bro.
I'm kind of jealous. Man. You guys bonding on air without me.
Okay,
like,
pause. All right.
What is happening? Anyways, let's talk about SaaS, ladies and gentlemen. Mine Bitcoin, own your rigs, ditch the exchanges. That's right, ladies and gentlemen. There's other ways to acquire Bitcoin than just buying it. You know what the other way is? You know what the original way of buying, of acquiring Bitcoin was? The only way was to mine it, right? And I think a lot of people have forgot the roots. So, Kent, you built this amazing platform that makes it incredibly easy for anyone who's not, technical to essentially start mining today, right? You buy the rigs. There's no additional fees. And within 24 hours, 48 hours, those rigs are up and running. You have this amazing dashboard. You can see how much Bitcoin is actively being mined. Kent, talk to me, man, because I think people initially they see mining as this daunting task, as this thing that's very, very complicated. You guys have made this incredibly easy through this fantastic UI that you guys built. I remember the way that you described it to me the other days is you guys were a technology company. It was a technology company. And then, you integrated the Bitcoin mining as a service. So talk to us, man. The floor is yours.
Well, here's the thing. I want to go back to what we talked about earlier, right? The alpha and omega candle, the 100K candle. There is going to come a point in time, and I hope it goes slow, right? I don't want it to be all at once, but there's going to come a point in time where you can't buy your Bitcoin. You're going to have to earn it. Well, guess what? There needs to be a way for people to earn their Bitcoin. And the way that Satoshi designed the network was to mine the Bitcoin. And if you go back to early Bitcoin history, the 2009 to 2013 era, everybody that acquired their Bitcoin then was mining it. It really wasn't until Coinbase opened their doors, which happened to be the same year that the Bitcoin mining ASIC came out, that people shifted from mining to buying their Bitcoin. So it's not in our DNA from the very beginning to buy, but to mine. And there's going to come a point in time where you can't buy, you're going to have to earn. So guess what? This period that we're in right now, I think is the Goldilocks period that we're living through, right? Where our grandkids are going to come up to us and be like, hey, grandpa, like you could buy Bitcoin? Like how crazy is that? And here we are at SAZMINING, we're just like, no, that phase is going to end. We're building the on-ramp for the earn phase of the Bitcoin adoption process. And so what we've done as a tech company is built that platform, couple clicks, buy a mining rig. We've got some mining rigs deploying in 2 days in Paraguay. So if you want to be deployed in 2 days, great. We'll get your wild sats flowing. And then you're getting sats streamed to you right off the network, directly into your wallet. We never touch your Bitcoin. And the only way we make money is if we produce Bitcoin for you. So you have to pay for the hardware, you have to pay for the electricity, but we don't put profit on any of that. What we do is instead split 15% of the Bitcoin off the back end and tell the mining pool, hey, look, you got to send that to our wallet, 85% to our client's wallet. All our clients do is they give us a Bitcoin address and the Bitcoin goes there, and we communicate through our platform with our clients. We've got monthly town halls. I've seen a couple questions about that. So if you're a client, and only if you're a client, I give a presentation once a month, tell everybody what's going on in our various data centers, where we're in Norway, we're in the US, we're in Paraguay, and give everybody updates what's going on, what we're building, how our software is improving, going to improve their experience. So if you're a client, and on the stream here, No Friday is when it's coming up. And if you want to get wild sats, they are better sats, I would argue, than purchasing them through the banking surveillance state, right? Where you go buy them off an exchange, because you're getting them wild and hot just in the same way. If you go forage your own food, it's usually better for you. Wild sats, I think of, are better for you as well, because they're yours. They're outside of that system. And usually they are on a monthly basis acquired at a lower cost than what you could buy them for. So I call that energy cost average Bitcoin position. The monthly energy cost versus electricity is lower than what you buy them for. So your dollar is going further in terms of how many sats you're stacking. That does not include the cost of the hardware, which we typically see, especially in bear market conditions, a 1 to 2 year justification period for the hardware. So the numbers look good, and they look good if you believe that Bitcoin's price is going up. If you don't believe Bitcoin's price is going up, then by all means, don't get into mining. But if you believe Bitcoin's price is going up, you have a 4-year mindset, I'm going to I'm going to acquire Bitcoin and I'm going to sit on it for at least 4 years. Bitcoin mining is a wonderful opportunity, and nobody has made it easier. Go check out our Trustpilot scores, and you can see how we are doing things different than anybody else. So nobody's been a tech company that's come to the mining space to apply that technology first approach, and nobody has taken a, hey, we're only going to make money if we produce Bitcoin for our customer.
I got this very interesting comment, Kent. Thank you for the super chat. Bitcoin Capital, thank you for the $2. SAZ mining proof of hash versus rental paper hash. What are your thoughts on that?
Oh, I saw that question coming up too. So I don't. People are paying a premium for rented hash rate these days. It's a new opportunity. I don't see how it's different than cloud mining, which sort of had a bad reputation a few years ago. Cloud mining as an idea makes sense, but there's trust issues with where the hash rate comes from. So hopefully that doesn't repeat here with the rental hash rate market. But what you're doing is you're basically saying, hey, it's somebody else's mining rig. You point I want to rent the hash rate from that mining rig, and it's a way that the person that owns the mining rig can get a premium on the Bitcoin, and it's a way for the purchaser on the other end to not have to deal with the messiness of mining, which I think largely we've solved for people. So I'm curious to see actually how SAZ mining competes with this. The main difference is that the time period can be much shorter. Now, to your point, is this really mining? I don't think so. Although you do have freedom to direct that hash rate to signal for different things in ways that maybe you couldn't with us until we deliver features. So there is a little bit more freedom there that you've got. But I think largely it's going to be a small blip in the overall mining movement here, because the number one problem that an individual has with mining is low energy costs. And unless you can find low cost energy, it's just not cost effective to mine Bitcoin. And that's basically what we built our business around, is going out and finding those low cost energy opportunities with great data center operators, and then packaging that all up so that it's simple for an end consumer to be able to acquire Bitcoin through mining through a user experience and platform that we've developed. So yeah, I'm curious to see where that market goes, but I don't think of it as a miner. I would call that, to use Bob Burnett's words, like a hasher. If you're doing that, unless you're creating your own block templates, I don't think you're really mining. I think you're enjoying the fruits of hash rate.
Absolutely, 100%. And another thing that I love about you guys, Kent, that really kind of differentiates yourself is the fact that unless those machines are actively hashing, you guys don't make money, right? And I'm a big believer in aligned incentives. I think that's so important. If you have an aligned incentive structure, then you're not going to have bad actors, because essentially Kent's company, SAZ, is incentivized to keep those miners up and running, because if they're not up and running, they're not making money, right? So again, there's different models, there's different formulas to how that specific part of the market functions, that specific industry. But I love the aligned incentives. I think it's incredibly, incredibly important, because it creates a win-win situation versus we win no matter what, and you're essentially at the mercy of that said provider. So I really, really like that as well. We got an interesting question. I don't know if you can answer this, Kent, but someone says, how is the movement of the Paraguay government shift in stance affecting SAZ mining? From my understand, the Paraguayan government has had a very, very open, they've been extremely friendly towards miners.
Yeah, there was a recent bill that that person may be asking about, that asked for people that are residents of Paraguay to reveal their digital assets. It was a pretty invasive request from the local tax authority there. It doesn't impact us. We are not a local registered tax resident as a business there. And so we don't have any direct impact. The only people impacted are local residents. And what I am told, and this is not advice, but what I'm told is the general stance, given the honeypot nature of exposing that information to the government, most people that do have digital assets plan to ignore the request because they're worried about their physical safety. So I don't know how that's going to play out. It seems to have been a fairly ill thought out program that they're doing. What's been more interesting and exciting to see is, a couple of years ago, or in the last 2 years, I would say, Paraguay went through and really clamped down on illegal Bitcoin mining. And it was interesting because watching on Twitter, you would think that the people were defending the right for people to steal electricity, but that's literally what was going on in Paraguay. And it may just not have been understood that people can literally steal electricity. They go out there to the electric lines and basically throw jumper cables on them and grab electricity from the lines and in an unmetered way power mining rigs. But that was going on at scale in Paraguay. The Paraguayan government cracked down on it. I mean, we're talking hundreds of megawatts worth of this activity going on, and they cracked down on it, and they took a lot of the mining rigs from that, and now they're looking to deploy them into production to generate Bitcoin for the Paraguayan government. So to your point about aligned incentives, to me, that's a wonderful thing for us as a miner in Paraguay, is that now we've got the same interests that the government does there. They're mining Bitcoin alongside of us, not literally, but like in the same country and same region. So I actually think that brings things together and leads to better governance over the mining industry in Paraguay. So I'm extremely bullish on Paraguay, and it is one of the top regions with excess hydropower in the world. So clean excess electricity, the repatriating power. I mean, we have some capacity still left there, limited, but it's, I think, a long-term, very viable mining district as a result.
I love it. And yeah, absolutely bullish on Paraguay. I had the privilege to be able to go visit Itapu Dam and so much excess hydroelectric power that, again, could be turned into wild sats. So guys, go to SAZMINING.com. Their service is great. And also their support is great, right? So if you guys have any questions, you jump into support. They'll be more than happy to answer any questions you might have. Go to SAZMINING.com. Here at Simply Bitcoin, we highly recommend them. It's a great alternative way to build your Bitcoin stack without having to buy it, right? And getting those sweet wild sats. Anyways, I do want to give one final shout out to a sponsor of Simply Bitcoin, the Bitcoin conference that's coming up next week, ladies and gentlemen. It's going to be in Las Vegas, Nevada. Simply Bitcoin will be there. Kent will be there as well. You guys don't want to miss the biggest Bitcoin celebration of the year. I'm going to be on stage. Kent is going to be on stage. It's going to be fantastic. Your favorite Bitcoiners are going to be there. Michael Saylor. We have the head of the SEC. We have the head of the CFTC. We have Eric Trump. We have Afro Man, who's going to be making a keynote appearance and talk. So if you guys want to go to the Bitcoin conference, Bitcoin 2026, get your tickets now. It's next week. You are literally running out of time. It's not a hyperbolic statement. It's April 27th through the 29th in Las Vegas, Nevada, Bitcoin 2026. Scan the QR code on your screen, and we'll see you guys in Vegas. All right, everybody, take care. Smash the like button. Consider subscribing, and we'll see you on the next episode of Simply Bitcoin Live.
Today's episode was brought to you by BitcoinWell.com, a Bitcoin-only platform on a mission to enable financial independence.